Welcome back everyone to Don't Fear Finance. Today we'll be discussing a topic that I didn't really know much about before starting my research or even before I even got into finance. So for this video we're going to look at what is a better investment in the S&P 500 or regular stocks. So today we'll look at how safe it is, its long-term returns, its short-term returns, and so much more. So stick around to the end to find out which one is a safer bet and is a more profitable bet. Generally, investing in the S&P 500 is a much safer bet than investing in one singular stock or one type of stock. This is purely because you're not putting all the eggs that you have rhetorically in one basket. And by this I mean the S&P 500 has over 500 of the US's top stocks. It's in the name. But when you're investing in stocks, you're investing in one singular stock and you're putting all your eggs in one basket. So let's say you're wanting to invest in Tesla stocks. You invest in it and a few days later it goes down drastically. But then you also have some money in the S&P 500. That one stock goes down, but the other stocks keep the S&P 500's return rates up. So short term, the S&P 500 is a safer bet. Which one now is better to invest in long term? So investing in the S&P 500, again, you get around a 10% return rate, and usually on stocks, if they're doing well or if they're not losing value, then you're getting around an 8% return. So in the long term, if this keeps up, you don't really change how you invest, then the S&P 500 will have higher returns. But if one of your stocks, it goes insanely well and it's an insane jump from, let's say, an 8% return to a 12 or 15% return, that's a huge jump. You can actually get a much better return, and then you have more and more value from that stock to keep going throughout the long term. But if a stock drops, let's say the Tesla stock drops, then you will actually be losing money and you'll have to make that money up through the long term, which isn't too big of a deal, but stocks are an up and down in value, and that really will sometimes halt your progress and the value that you get from those stocks. But if you invest in the S&P 500, then there will be stocks that go up and down and up and down, but those will drop off of the S&P 500 or are worth less in the S&P 500, and other stocks, let's say Amazon does incredibly well, then that will bring up all of the values of the stocks. So there will be times that the S&P 500 will go down, but it will be a much smaller drop or a much smaller increase of the value of those stocks. Generally, if you want to have higher returns, but you want to have super low risk, then you should definitely invest way more into the S&P 500. But if you invest in stocks, then you can actually get a much higher return, but you can also lose way more than you would have in the S&P 500. So long term, if you want a safer bet, invest in the S&P 500, but if you want higher risk, high return, then invest in stocks. In general, putting all your eggs in one basket is quite unsafe when it comes to investing, because the market is super unpredictable. All these people saying that they can predict the market and say that they can tell you when the next crash or the next boom is gonna happen, that's just complete BS, because the market is so unpredictable, because sometimes it'll go down because the government's printing more money or because a global pandemic happened. So by saying that you can predict the market, you can't. So if you're gonna invest in stocks, it's much better to invest in 4 or 5 stocks. If let's say you have $100, then you want to invest in 4 different stocks and you pay $25 for an Amazon stock. Like, these aren't the actual prices for these different company stocks, but when you have a certain amount of money, you should divide up all the money that you have into a reasonable amount so then you can pay for 4 different stocks. But on the other hand, safety just in general is better if you just diversify your portfolio, and the S&P 500 really does that. So the S&P 500 is much safer than a regular stock. Thank you guys so much for watching Don't Fear Finance this week. Stocks versus S&P 500 was a very fun video to film and to make. I will be going into depth a lot more on my channel about each of these subjects, so if you do love talking about stocks or S&P 500 and both, then do subscribe, like the video, and comment down below because I'll be replying to all of your comments. So until the next video, I will see you later.